Capping off a busy week. That's our topic for today's Backstage Pass. Well, hey friends, hope you're having a great day so far today. Happy Friday. We have made it through an incredibly busy week. So far this morning, stocks are down pretty sharply and mortgage bonds are down as well. Mortgage bonds are down about 15 basis points at the time of recording. The 10-year yield is up about 9 basis points, and mortgage bonds are up from their lows of the session so far today. They were as low as 30, 40 basis points down. Now they're down about 15 basis points. The national average for a 30-year conventional fixed rate mortgage, yesterday it ended the day at 6.13%. Kind of made some improvement on the interest rates. That's kind of what we were expecting for mortgage rates. Today, based on market movement, we expect mortgage rates to worsen just a little bit, go up just a little bit, probably closer to that 6.2, 6.3% range that we saw a couple of days ago. And like I said, it's been a very, very busy week for the markets, a lot for the markets to digest. Today, we did see some data release. It's called Market Services and Manufacturing PMI. And this data kind of capped off the week and really just continued to indicate or tell the story of a slowing economy. So this is what's called a diffusion index. Anything above 50 shows an expansion, anything below 50 shows a contraction. And all three of the indexes on this Market Services and Manufacturing PMI data, they all three were under 50 and they all three were lower than what was expected. So again, just indicating some slowness, tying that onto the CPI with inflation coming down and some of the other data that we saw yesterday, retail sales and things like that, showing some signs showing a slowing economy. Now, the markets, really all this data and this cap off have set up the markets for what we're going to call holiday trading, okay? So it's had the effect, the slowing economy, the CPI coming down, the Fed's more dovish tone and slowing down their rate hikes. It's all had the effect that we've expected. Mortgage bonds have moved up into a higher range of trading. The 10-year yield inversely has moved into a lower range of trading and sets up what we're going to call holiday trading, where there's just going to be holiday volatility and mostly sideways trading inside this range that we have set right now. Now we do have some data that is coming out, some news reports that are coming out due for release over the next couple of weeks, PCE being one of them. That's coming out next Friday. But other than that, if this data is surprising over the next couple of weeks, like if PCE comes out and it's surprising, then we could see some major market movement. But as a whole, we don't expect to see that. We expect to see pretty sideways, in the range that we're in right now, sideways trading, and not a lot of huge movements one way or the other. But you never know, something could surprise us. Now that's all the news that we have for today, short and sweet after a busy week. Listen, I hope you have a great weekend. Remember, stay positive, and we will see you on Monday.